Back, Apple hitting another record high today, and according to our data team at CNBC, it is the most overbought company right now in the S&P 500 with a relative strength index, RSI, something Josh talks about all the time, of 92. It's posted 25 all-time closing highs so far this year. The question is, Josh, if that's something that you look at and tell our viewers to pay attention to in the way we should think about what to do with stocks, what do I do with that?
The message of Apple is whenever Warren Buffett is selling something, you want to be buying with both hands. JK, love you, Warren. All right, what's going on here is absolutely remarkable. They obviously had a product cycle this year with the new phone. Did not get the critics to be blown away by any of the stuff they did. They're slowly rolling out AI features. They put like this image playground app on my phone yesterday. Fine, I guess I'll try it. The iOS 18 refresh was a disaster. I heard the All-In guys trashing that last week. It really just hasn't been a great year for headlines at Apple, but the fundamentals remain so powerful. I think it was enough for this stock to continue to be accumulated. It also doesn't hurt that we're shattering every record on the books for ETF inflows. Apple's in every ETF. It's in the dividend ETF. It's in the shareholder yield ETF, buyback ETF. They're a leader in CapEx. They're a leader in R&D. It's in the tech ETF. It's in every index, Dow, S&P, NASDAQ, XLK. So when you have money pouring into ETFs, and this is the largest or second largest holding throughout the course of the year, plus the buyback, it's not crazy to understand why this thing has been melting up. I don't think at a 92 RSI, it's a great purchase. So I'm not adding to it, but would I sell it with a gun to my head? I probably still wouldn't. So I think a lot of people are where I am with this stock, and that's just what it is.
So you read it more of a potential bad sign of getting in or buying more, but not necessarily a bad sign that you need to worry about it turning down because it's so overbought.
If you own it for the last, I'm in this stock literally forever. I can't even tell you what price it would have to get to for me to feel it. So I wouldn't be shocked if we saw a 10% correction in Apple to start off the year as money rotates. Keep in mind, the RIA channel is $7 trillion. Do you know what RIAs do in January? Okay, they rebalance. Any form of rebalancing at any large wealth management organization is going to involve selling Apple. You have to understand that. If you don't understand that, you don't work on Wall Street, you don't belong here. So 100% you're going to see selling come out in this name, but how extreme is that selling really going to be? Are people walking away from the stock? Absolutely not. So you have to be willing to endure that correction if and when it happens, if you're going to be long this name. And so most people are.
Carrie, client calls you up later, right? And it's like, look, I was watching halftime and I saw you guys talking about Apple being so overbought. Stock's been up and I'm up a lot in it. What are we doing about it? What should we do about it?
Yeah, well, I think that there are a couple of important factors. One is, what's the tax hit? And many of our clients are taxable, most. They care about paying capital gains. Stocks like Apple, it doesn't matter where we bought it. It's all a big gain right now. So to the extent that people say, oh, we thought it was a 4% position and now it's a 5.5%, I understand the rebalancing point that Josh brought up. But also, there is the tax hit. And I honestly think that since most people are underweight these names, they are underweight Apple, and the idea now to continue to be underweight is less attractive because the rest of the market has done so little for people.
I mean, to give you an idea of what we're talking about, Steph, right? You don't own Apple anymore.
No.
But at 92, for a stock like Amazon, which I think is more like 77-ish.
Had a nice run, yeah.
It's an incredible run, but it's not 92.
No.
But how do I think about the types of overbought stocks and what I want to do with them as we approach the end of the year and make the turn?
Well, as you know, I sold Apple because I made 40% in 4 months' time, and I didn't think, and I still don't think, that this version of the iPhone is going to be the super cycle from AI. I definitely think in the out years it will be, but next year I think it might struggle, and I think it's ahead of itself, and I took some gains. But what I did do as a portfolio manager, since I'm underweight, a 7% weighting in the S&P 500, I made Amazon huge. It's a huge position, my largest by far, so that if it does participate, if it does outperform, I'm not going to get hit by being quote unquote short Apple because I don't own any Apple against my bench. So it's a little technical, but quite frankly, I like Apple. Amazon much better than Apple because I think there's a lot of ways that they can win. It's retail, they're taking share. It's AWS, we all know about the cloud, and it's accelerating. Advertising never gets talked about. They have huge amount of cash. I think they're going to announce some sort of a dividend or a bigger buyback. And yeah, it's expensive at 35 times, but it's at 14 times EBITDA, and historically it's traded at 17 to 18 times. And so I still think there's upside. I still want to own the behemoth in the discretionary sector.
Is this a sign for you of the excess that you were talking about when you see something as overbought as the data team says that Apple now is?
No, because we don't sell things on technicals. We buy and sell on fundamentals, Scott. And
are there the fundamentals are behind this move higher, as we said?
Well, I think what's behind this move higher, quite frankly, is liquidity. I think people are chasing liquidity at the end of the year because they, quite frankly, don't know what else to do, so they're continuing to own these big stocks, number one. Number two, there's a difference between owning and trading. We're not traders, we're owners. We've owned the stock on behalf of our BMO clients for 12 years. I think this is a juggernaut. And so when there's two rules to Apple.
Can go up with lack of, fundamentals behind it. Are you telling me there's fundamentals behind the last 13% in a month?
I think there's fundamentals to owning this stock. And it's cash. They have more cash on the balance sheet than several developed countries. Number two, they're buying back stock. Number three, they're paying dividends. Number four, you can make a value component to this. You can buy a growth component. And lastly, here's the rule to Apple. Never bet against the U.S. consumer and never bet against Apple. Period.
Mic drop. All right. See, I knew I'd get you going.